Welcome back to the IB Investor channel. A little bit of a different intro in this video. I had some fun here, so I hope you don't mind. Anyways, in this video, we'll cover the short introduction of the company, the share price development, the sales and profitability, the cash flows, the debt situation, and much more. Stay tuned. ASSA ABLOY was formed in 1994 through the merger of Swedish firm ASSA and the Finnish high-security lock manufacturer ABLOY. Now, the current market cap of this company is 271 billion Swedish kroners here, so quite a big company. It trades under large cap, under the ticker symbol here of ASSA, and it's the B shares here which are traded on the market. The industry is within construction supplies, and the owner is Latour, and they're currently the biggest shareholder as well here, alongside of Melker Schörling. Now for the share price development, and we can see that the stock has had a tremendous growth here for the long period here of 13,300% here. So from inception in the 90s, we can see that the stock has grown very, very well, and especially after the most recent financial crisis here, we can see that the stock just took off basically. However, in the most recent time, it's been much more muted here. So we can see the 1-year total return here, and this includes the dividend reinvested back into the stock here. So 10% here for the first year, 33.6% here for 3 years, 52% here for 5 years, and 162% here for 10 years. So over the 10-year period, it is a little bit of a lagger right now, I would say. I mean, especially compared to its history here. So, but could also be the case that perhaps valuations and so on has come down. We will see that later in this video. But it's certainly one of the more commonly owned stocks out here. So at my broker here, there's 27,500 owners right now. And we can see that there's only about 1% of the total float here which is being shorted here. So quite a low interest, but still it's more than zero. And again, the market cap here, so quite the big company here in Sweden. Now for the income statement of this company, we'll start with the net sales here. So we can see the blue line here, the net sales. So ever so growing, except for some decline here in 2020. So this was the COVID years here. And we can see that it didn't really take off here until 2022. And then in the most recent quarter here, we can see some steady growth here as well, continuing here. Also for the EPS, kind of the same story, is a little bit volatile up and down here. So in 2015 to 2016, there was a decline, but then it took off again, and then a big decline here in 2018. And a big recovery here in 2019, and then it's been pretty stable here in the most recent quarter here, so no huge development for this company. However, looking at the gross margin here, they currently have a 40.1% gross margin here, which is actually the highest recorded here, but as you can see in the past, it's been pretty close here to the 40% line, so it's pretty much in line with its historical levels here. And then looking at the profit margin here, which currently sits at a 9.8%, which is actually a decline here. So we can see in 2021 here, they recorded the highest here for this period here at 11.5%. So it's not a huge difference here. So the difference is only a few percentages here, but still they did achieve almost 1.7% higher margins here in 2021. So management have had the possibility at least to, drive higher profits here in the past. But nothing alarming when I look at this. But the only exception here would be the big drop here in earnings or profits here for 2018. Now looking at the share count history for this company, we can see that it's been pretty stable. They only posted about 2 million shares here in the most recent quarter, but we can see here for the remainder of the period that the share count in millions here has not moved pretty much anything here except, as I said here, of the recent times. So no dilution here to say that would cause any alarm. Now for the free cash flow situation here, we can look at the margin here first. So The margins of this company has not been huge, but we have to remember that this is a industry company which seem to be quite cyclical as well at times. And in the most recent quarter here, we can see that they actually posted a negative margin here, 22.2% negative. So not very good, but we can see historically here it's not been super high either. And also this paints pretty much a similar picture. And as you remember, this company has not really, had any dilution to speak of really. So this pretty much would paint the same picture on the left as the right side here. And also for some peers here, so AdTech at 7.1% free cash flow margin and Indutrade here at 1.6% free cash flow margin, just as a comparison here on the left picture here. Now for the cash flow overview, and we can see that the cash from operations has been growing pretty nicely here over time. However, they did dip a little bit here in 2021, where the cash from operations did go down a little bit here, but then it picked off here and has been higher here than it's ever been in the most recent quarter. However, we can see that they've also done some investments here. So in the orange here, we can see the capex here pretty much, and it's been pretty steady here at around 4 to 6 billion over this period here. But as of late in 2022, in the most recent quarter here, we can see that they had a lot of investments that were being executed here. So 51 billion Swedish kroners here that was plowed down here in investing. So it's going to be interesting to see the debt situation here considering this, but still quite a massive move here in terms of investments here from year-over-year situation. As we could almost assume on the previous picture here, we can also see here that the net debt has been quite big. So this company has acquired a lot of net debt here as of late. So we can see that it's almost, it's more than twice here. Sorry, more than doubling the net debt here from one year to the other. And it looks like it's not even close in any other period here. So certainly a big acquisition here of a lot of net debt, which is not very good. But, it all depends on this number, whether or not they can drive this number up and reduce this gap here, because this is always worrying when you look at a stock and you just see that the net debt is driving away from the cash from operations here. But as it looks right now, I think it's a little bit too early to say, but I'm pretty sure that they made some big acquisition here, and we can probably read about it later on in the CEO remark, but certainly a little bit alarming here, but we will see how it will progress in the coming quarters here, and we need to see that this gap is being reduced here over time. Otherwise, we will be worried here. And again, we can see here for the net debt to EBITDA how the multiple here has moved quite a lot here from 1.4 times up to 2.6 times here, so almost twice that of last year. So quite a difference, and yeah, I mean, this number has to go down in the future. This number in itself perhaps is not the most alarming numbers I've seen. I've seen 7 times, I've seen 8 times figures here for some other companies, but at least they should go down to their historical levels here at around 2 times net debt to EBITDA. But it's going to be interesting to see how this number will develop here in the future. Now for the enterprise value to EBIT, and we can see that the current number here in the most recent quarter is 16.2 times multiple here, so quite the lowest here over this period. So it's actually the lowest it's ever been in the 10-year period here. So it's a much better value proposition today than it's been in a long time here. And we can see, in 2021, the company did trade at a almost 23 times multiple here. So a much better value proposition today compared to its historical reference here. However, I mean, this doesn't mean that shareholders or speculators or investors should jump aboard. We still have to remember the debt situation here, that this company has acquired a lot of debt here recently. So that's probably scaring a lot of the investors here, and which is probably one of the reasons of probably many here why the stock or why the EBIT to EBIT multiple here is a little bit lower compared to that of its historical multiple here, but certainly a much better value proposition today compared to its historical reference values here. Now for management's allocation performance, and we can see that this company is pretty much in line with a big industry company that this company is. So currently at a 8.6% return on invested capital here on the left side, and we can see that it's been around, maybe 10% overall. They did have a big gap here in 2018, but around 10% here is the number that management has been able to perform, and it's not a bad number per se, but it's certainly not tech numbers here, where you could see 30% or more. So we have to remember all the time when looking at these kind of companies, we have to refer them or reference them to other peers here, which is industry companies, most likely here then for this company. And also then the return of equity here, it's not super impressive, but I mean, it's still a 14% here, which is still pretty okay for being a industry company. It's nothing, to be embarrassed about. Certainly, it's much worse here actually in 2018. But I'm not sure if they sold off some companies or what actually happened here in 2018. But it looks like they had a lot of problems here, as we've seen in the past. Also for some other numbers, that 2018 just seemed like a strange year for this company. But looking beyond that and the other numbers here, I mean, it looks like this company has driven higher return on equity in the past, so management has some job here, or has some potential here to drive higher ROEs in the future here, to be at least in line with their historical expectations here. Now for the dividend yield on the left side here for this company, we can see that currently trades at about a 1.9% yield here, and that equates to about a 40% payout ratio for this company. So they're paying out a lot of their profits here in dividends here, and we can see it here on the right side actually, that they're paying out about 4.8 kroners a share here currently. But we can also see the historical figures that they have paid out a pretty nice dividend each and every year, and that includes 2019, the fiscal year 2019, which was paid out in 2020. So even during the most COVID stress year here, they actually paid out a dividend. So the board has a lot of confidence in the business, even during times of stress. So that could be, a quality stamp, if anything. But looking back at the yield, the company is not really traded above 2% here for any meaningful period. So that means that, the current yield of 1.9% is pretty much in line with how it looked like historically speaking here. And we can also see here in 2014, even during this time here, they had a pretty low or medium-sized payout ratio here, 37.4%. So not much different compared to that of today, even during this period here. So it looks like management has been pretty consistent of paying out roughly 40% of the profits here to shareholders here. Now for the CEO remark, I read here that they had some challenges here. So the organic sales growth was only like 1% against comparable numbers here, which is not very strong. We're not going to dig deep into these numbers, but they did record a improvement here of the operating margin here at 17.4%, excluding the acquisition here of HHI, which is good. They also reported a higher cash flow here, or cash from operations here, which improved by 59% here to 7.2 million. Or 7.2 billion Swedish kroners here, which is actually quite strong. So that probably should provide a lot of possibilities here to, pay down the debt here, so that the debt levels are not going to be crazy here going forwards, if they can keep this up, so to speak. He's also telling us here that, they have some tailwinds in terms of, the digitalization offering here. A lot of locks and so on can be opened with cell phones and whatever. And that is something which they have in their product offering. They have made a lot of acquisitions here, so 18 businesses in total, and they have signed 10 acquisitions in the third quarter. So, a lot of acquisition has been made here in this quarter alone. So it's going to be interesting to see here in the coming quarters how they will be contributing here to the holding company here, or the sorry, not holding company, but to the company as a whole. Sorry. They're also telling us here that the HHI acquisition here, they have been able to realize some synergies here, which have improved HHI's underlying margins here versus the first half of 2023. So that is quite impressive that they, kick-started this quite fast here, and they can already see some improvements here, which is very nice. But we're going to have to see more of that, I would assume, in the next quarter here, which is going to be the final quarter here for the year. So quite interesting to see. Now, ASSA ABLOY as a company is also quite an important company for many shareholders out there in Sweden, because many shareholders own stocks such as Latour as well. So ASSA ABLOY is the biggest listed company for Latour. So if this company fares well, so to speak, in terms of growth, then Latour will also do pretty well here going forward. So a lot of responsibility lies here on the CEO to perform good numbers here, not just for the shareholders owning ASSA ABLOY, but also for shareholders here holding the Latour stock here. I might make a video about Latour in the coming days here. It's a pretty interesting holding company as well. But anyways, except for the slow down in organic sales here, he's saying here that he's pretty confident in the future and the long term. So pretty good CEO remark, but obviously I would have wished to see more of the headwinds here, what he's seeing as big headwinds here going forward. So all right, this was it for this video. Thank you very much for watching. If you liked the video, please hit the like button below and subscribe to the channel for more content. Thank you. Bye-bye.